Hello everyone, a very good morning, good afternoon, and good evening to all. Myself Vaibhav. I welcome all of you to today's session of Visual JForex, in which we will be starting afresh on a new formation using the indicators, simple moving average, and money flow index. So this session is going to be dedicated to the logic of algorithm involving these two indicators. We will see how we can use this combination to look for the optimum trade entry and exit scenarios for the bullish as well as for the bearish environment. So let us now head to the Visual JForex board, which has been developed by the Dukascopy Bank SA to make the job of algorithm development easier. We don't have to take too much effort. If we spend couple of hours, we will be more or less quite proficient in uses of these format of the Visual JForex, and using the platform we can develop the algorithms on our own. So this is the JForex board, and you will find these two indicators listed amongst this drawdown panel. The SMA is included amongst the moving averages. Here it is, simple moving average. This is the simplest, as the name suggests, of all the moving averages. And with it, we will consider a volume indicator, money flow index, which gives us the idea of whether the money is flowing into the instrument or flowing out of the instrument. That is, whether the accumulation is happening or distribution is happening. So these are the two indicators on which we will be relying for determining the trend and then the entry point. We will be working on the hourly candle period, and we will be working with the Euro USD as the default instrument. So I will give you first the idea of the logic. Is the Euro GBP chart, which I will change to Euro USD with the candle period of hourly. These are the indicators which we had used in the last session. I will change it and add the instrument on which we are working, the SMA. And MFI. SMA is yet to be plotted. I think I will have to add it anew. Let's try changing the candle period. Okay, we got the SMA. Oh, it has been plotted. It is just on the higher side. I will change the calculation period to 100. And we will remove this extra. So here we have the indicators. Let's increase its width so that it is easier to recognize, and also we can change the color to a bit brighter. All right. And if you have been using these two indicators, and even if you haven't been, I will explain what these indicators stand for. The SMA gives us the idea of its average price, whether the underlying instrument is on an average rising or falling. If we see the SMA line for the given time frame, given time period is in decline, that means the underlying instrument has been trending bearish, the average price move has been on the downward side. And if the average price is on the rise, that means on an average, the underlying instrument has been rising for the given calculation period. And with that, we can avoid the short-term spurt and we can trade with the trend. So whenever we have to identify a trend with consistent formation, we can use these SMA's direction, whether it is on the rise or whether it is in decline, and we can then take our trading decisions. So for stabilizing, for figuring out underlying current, we can use these SMA, and that's what we are going to do in this session also. And then we take the help of this MFI, the money flow index help. We will use two values in particular, the upper level of 80 and lower level of 20. The values above 80 denote overbought scenario or bought pricing for the underlying instrument, and when the values are below 20, that means the underlying instrument has been trading in the oversold scenario. So we will take these two output values and then along with these trend we will look for the entries. So the formation is going to be quite simple. Now that the underlying instrument has been bearish, has been trending bearish for quite a while, we will be in such a scenario look for short selling opportunities. So here we had this move close to 80, but at no point in time we had the closing value above 80, so no trade would have taken place. So let me find out the opportunities where the trade might have happened as per our logical requirements. So we want for any sale trade to take place, the SMA to be in decline, and then the underlying instrument has to enter into a overbought situation and it has to sustain there for quite a while. It has to consolidate on those levels, and after that, whenever it starts to go in decline again, we will look to initiate the trade. That's what the logic is for the sell side. For the buy side, we will need the SMA to be on the rise. So we will be comparing the SMA over the last few hours. And with that, we will then take the help of this MFI indicator. And here we will need the values to have spent some time below 20. And whenever the rise happens, whenever it again starts to rise, we will look to initiate the buy trade. So the formation, as you can understand, is pretty simple. So logic is fairly simple. So let me find out some examples here on this chart so it will become easier for you to understand. First, we look for any kind of a buy trade which might have happened as per our system. So here we had this deep below 20 on the MFI, the SMA is on the rise, and at 13th GMT of 31st May, we have the MFI climbing back above 20. So here, and it had indeed spent 3-4 hours below 20. So we have this kind of formation where the underlying instrument entered into a oversold territory and then it stayed there for a couple of hours at least and again started to rise. So in such kind of scenarios we want to take the trade. So here the trade would have happened and it went on to rise 30 to 40 pips from those price levels, and then again it went back into the decline. So the logic is we want to be trading with the trend, and also we want to make sure that there has been prior correction and consolidation. So we will have a higher probability of making the trade in a profitable manner. And now we look for a formation where the sale trade might have taken place. So I think that opportunity would have arisen somewhere here. We have this SMA in decline, and then we had this correction happening in the Euro USD where it had risen substantially, and we saw the MFI climbing above 80 and it's staying that way for a couple of hours, and then it started to dip. So in these kind of scenarios, the trade would have taken place. So we had the dip below 80 at 11th GMT of 29th April. So that is here, and the trade would have taken place, and from there on it went on to decline, say close to 30 pips, and it stayed in consolidation levels. It didn't really climb back above this high, and then eventually it went on to dip 50 pips at the lowest level. So we will be having these opportunities provided by this formation using the SMA and the MFI, where we will be trading with the trade, and also we will be using the formation of overbought and oversold. So naturally speaking, we should have higher probability of ending the trade in a profitable manner, not in a losing way. So now we head back to the Visual JForex board where we have to get the indicator blocks in place to define the formation. First thing first is to get the instrument subscription done. For that, I'm going to need the logical components, if else statements, if else block. This time we use onTick as the start point. Default variable, default instrument will be matched with the tick instrument, and tick instrument will be matched with the instrument of choice. Which is Euro USD. So we have to find the Euro USD amongst these listed instruments. I think I have missed it. It should be somewhere. Okay, here it is. Afterwards, we get the position amount info to avoid any doubling down on existing positions. To do that, all position amount needs to be at 0. So again, first input equals second input. All right. Now coming to first SMA indicator block, I will change the candle period to hourly. We will take the look back period of 1 and time period of 100. I think something has gone wrong in this block, so I will have to redefine it. Position amount equal to 0. And we will compare the SMA's values over last 6 hours. So one with the look back period of 1 and another indicator block with a look back period of 6 is needed. So I will take SMA indicator block with shift value of 6 and candle period of hourly, time period of 100, components. Now we go for the volume indicator MFI, and here we will take 3 MFI indicator blocks as we need the MFI to have spent some time below the overbought or oversold territory in that zone. So we will have to consider it over a wider period of time, and then in the last hour it should have climbed back or climbed below the prior levels. So here I will change the candle period to hourly for all these 3 MFI indicator blocks. With the shift value being defined of 1 for the first indicator block, then it will be 2 for the second, and we will consider the value with the time interval of 4 hours. So here the look back period will be 5. Okay. Then we get the info blocks of get historical candle. And first one I will assign the candle period of hourly with the look back period of 1. So we will consider last 1 hour's pricing data. And then to pinpoint the exact entry point, we will also be relying on these 2 get historical candles of 10 seconds each with the look back period of 1 and 2 respectively. Okay, so we have gotten in place these blocks of various types: logical, indicator blocks, and then the info blocks to define the conditions which we need to put in place for the execution of the trade in the manner we desire. So for the session, we stop here. If you have any query, you can write back to me in the feedback section. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there. For carrying out the testing on the historical data, you will need the assistance of the JForex platform. So all these useful links have been provided in the bio. Thank you all for joining in. See you next time around. Till then, goodbye.